All right, welcome to Futures Friday. Let's not waste any time. Here we go. Luis with a consistent, I love it, consistent question asker here. Hey, Merritt, first of all, thank you for the tweets today. Always nice to see your rationale and what you're paying attention to during trading. What an amazing week. You are welcome. It was kind of fun. For those of you who don't know what he's talking about, I did kind of a live tweet thread as I was trading ES, very, very detailed around exactly what I was seeing and thinking. It was kind of fun. So check that out. I'm sure some of you saw it in real time. Okay, question one on your 15. Oh, let me hit this answer live button here. On your 15-year career, you talked about a lot of traders, failed, success, students, I guess. So in your opinion, how much time on average would someone take to become CPT? I know it's very subjective. Yeah, it's like saying, how much time do I have alive here on Earth? Right? I could give you an average, but how much help does that do for you? It doesn't do much help. I think that people underestimate how hard it is and how long it takes. I would say, I know it's a nice round number, but I think it's that 1 year is a really good amount of time. If, right, you can't just say 1 year to the guy who's following some Forex signals from some guy who stacks cash on his desk and doesn't do daily reviews, right? That's not a 1 year time frame to figure it out. It's not. It's a 1 year of wasting your time to maybe start in year 2 on some type of meaningful path. But I think for someone who is fully dedicated day in and day out, who's getting the reps in, I think it's attainable to begin to hold your head above water, which is what I call consistency, right? You're not losing any money and you're starting to put up $1 of net profitability on a consistent basis. Once you get there, I think people underestimate getting there. I think that's a big deal. If you can start to cover your expenses actively trading, you're really, really starting to put something together. You put together 3-4 months of being net profitable. I don't care how small, you are really, really starting to taste CPT. You're essentially there. Now it's just a matter of plugging some holes. Where are you draining some P&L unnecessarily so that you can keep more of those units of R that you're clearly making? Plug some holes, tighten things up. Usually it means getting a little more selective, seeing what's working, what's not. And from there, guys, it's about scaling it up. Now you just put on some more size. It's like any other business. You start to figure it out and then you scale. You show up on Shark Tank because you're looking to scale. And you don't get money from the sharks unless you're showing some decent profitability on a small scale. Okay, second question. Yesterday on ES, I think you didn't build a new CVA. You're correct. Very, very good. I kind of kicked myself after the fact. I kind of noticed it after I did the video, like, you know what? That's actually a CVA. In fact, just to prove that to you, I guess it's not proof, but we could still look at it. I drew this circle here. I cut off the old one. I drew this circle to remind myself, which I didn't do a DMI. Not that there was an opportunity today, but I didn't do a DMI today because, well, quite frankly, I didn't get any sleep, and I with the baby last night and stuff. So I actually slept in and missed the open, and I needed that rather than sucking it up and losing money. Trading not in a great mental condition. So let's continue with your question. So I think it's going to be a moot point. If my analysis is correct, why didn't you do that? I split this and this and this. So, I mean, the short answer is yes. I also split off the upper end of the the 15th and merged those 3 days because there was a good amount of balance there. So very good, doing a good job, Luis. You should be proud of yourself. Good job. James, how you doing, man? James asks, what kind of takeaways have you had in this year's trading regime, given the phenomenon of last year? Was there a come down period that took getting used to? How have you had to reinvent yourself this year? Great question. Great question. There was absolutely a come down period. I think it was, in fact, like, wasn't I in a drawdown? Like, I remember like October of last year. Maybe I'm getting another year confused. I'm not sure. I can't remember what I've been public about, what I've not been. A lot of times in fact, I've been kind of like what I think maybe too public about some hard times and drawdowns I've been through the past few years, and maybe not public enough about some of the successes. So I need to actually, for me, that's like humble pie, right? It's like saying I'm good enough that it doesn't bother me to say, hey, I'm doing bad. But that's because I have supreme confidence in what I can do. So I need to balance a little more publicly what I say in terms of, hey, I'm doing good here with the times I'm doing bad. Again, my nature, students of mine know I tend to be harder on myself. So I think sometimes being public about a drawdown is just a part of that. Yeah, September into October, absolutely. That was where the drawdown was. Thanks, JD. So yes, there was a come down period, but I think most of it was my fault. It wasn't like volatility went to zero. Yes, things toned down. Yes, things changed in terms of volatility, but conditions have still been good on a historical basis, into 2021. So there has not been a massive adjustment. It's more of like back to 2019 or 2018 plus a little extra volatility. Like the ranges are still okay. I couldn't tell you quantitatively what ranges are in 2021 versus 19, but to me, it feels fairly similar with I'd say on the upside, 2021 has more volatility. I know we've certainly had less of those little doji days and whatnot, little tight range days. We had a little bit of that late summer, but really not much at all. So it's been good conditions, and you've had markets moving at different periods, right? So that's something that's a little bit different. That's not like a this year reinvention, but I've reinvented, if you will, enough times to where for me, James, and not that it's always going to be this way. I know we had a crude oil, for example, the crude oil order flow scare during 2020. I went back to the drawing board, felt the need to possibly reinvent my read of order flow in that market. And guess what? We found some new things, and that was awesome. And then it started working again, and we got to keep the new things as well. So I don't do as much reinventing these days as I do cycling between, I've seen this before, I've been in this condition before, because I've been looking at short-term price action, since 2005, 2006. So like hours and hours and hours every day, not a whole lot of vacation, not a whole lot of days off. And combine that with a contextual understanding in terms of, essentially market profiling and whatnot, and understanding where I can expect smaller range days and expect higher range days. We're currently in the latter, looking for this S&P to break down. Yeah, so I haven't updated this DMI chart, right? So this is the level I was tweeting about, 35 or so. And so we've held that. So I'm bearish here. This is an older level. It's secondary. We can continue to use it. This is just yesterday's DMI chart, because when I start the next time I do a DMI, I'm going to start it back here and say, here's the recap, right? Because this is the day these levels were pertinent for. So this is, I probably actually shouldn't even have this chart up. I apologize. This is not accurate DMI levels for this market. Anyways, this is a relevant level here. So let's see if we can zip through there. Back down to delta neutral here again for the umpteenth time for the pit session. So I haven't really reinvented myself this year, James. I have gone back to looking at more markets than I was, right? Natural gas, corn. There's been some good markets with good movement opportunities, and that's a transition. I wouldn't call it a reinvention, but given the regime change, that would be, definitely an adjustment I made this year. Prashant, with your price levels, do you also need developing value to line up before taking trades? People have asked me, what's the one thing you'd remove from your charts if you, gun to your head, you had to get rid of one of your tools? For me, it would be intraday developing value. So given the strength of the narrative, let's get rid of this chart because it's just, whoa, what did I do? Screen sharing is paused. I don't know why. If you move a monitor, it pauses screen sharing. For me, if we have narrative strength and DVA proper usage, okay, and we have this little, it's a teeter-totter, there's going to be like an inverse relationship, right? So when the narrative is really A plus, well, then that's going to make my precise must-have process-wise use of DVA lower, right? If the narrative is not so good, well, guess what? DVA use is going to be pretty much, paramount. I'm going to use it precisely scalping in terms of, use it precisely, but knowing it's a loose framework, right? So that should be pretty clear. I should just keep the screen share up. Sorry. Where did the Zoom window go? Oh my goodness. Oh, look, it's on a new monitor. Okay. So Prashant, hope that helps. Inverse relationship to narrative determines my need for strong DVA confirmation. Nick Vaughn, hey man, how you doing? Hey Merritt, thanks for sharing your insight. I'm curious how you handle a shift in the market regime from balance to trending to balance. I find myself suffering drawdown during those transitions. Well, Nick, I'm pretty sure you're a student. I'm confused that that's a struggle point. Let's get the whole community in here. What do you guys think? Someone who's struggling handling the shift from balance to imbalance or vice versa. How do we trade that better? There's going to be a lot of things. I'll start talking. Maybe I'll comment on some other stuff. Use the chat, guys, for real-time commentary. Or if you have any answers for Nick to help this guy. So number one would be having good read on that condition. Okay. So understanding not using yearly, quarterly, monthly, weekly, CVAs, prior value, not like having a very ambiguous read and flipping around between what you think is most important in terms of how you're defining what's most important in terms of balance and things like that. Okay. So you need to have clarity. You need to rank and distill a pre-market prep down into something like what I do, like a DMI. You need to have key lines in the sand, or you need to have days where you say, I don't have a good read. There's too much dissonance. I need to wait for that to clear up. So that's step one, getting to the read to even then begin having this conversation. So you have to have a good understanding of where those regimes, if you will, are, what we call current market condition. You need to understand where that is and where it changes. I think I saw James chime in there. I think it's time to bring in what he's saying. You could have a bad acceptance read right? So if you don't have a good read on when and where those reads do change, that's all about acceptance. How good is your read on acceptance? Or as James intelligently points out here, you're being potentially anticipatory, right? You're wanting something to change. You're thinking it's gonna happen rather than what is happening. Go back and listen to, I think it was my last DMI from yesterday. I started talking a little bit anticipatory and I caught myself and I said, but let's remember, that's not what is right now. We're going to need to see XYZ for that to happen. So having a great read, where there's a great read to be had, is step one. Having a good read on acceptance relative to that read is step two. And then I think you're there. I think you're there. Gavin, would you suggest adjusting R depending on what's been working, in addition to adjustments for intraday volatility and range? That's not my style, but it's perfectly acceptable for a lot of traders out there. Let me finish your question here. For example, if going for 3R is working, but after trade review of the past month, 4R would have generated more. Is that enough data, assuming 3 trades a day, blah, blah, blah? So it sounds like you're being, again, not my style, not my tempo, not my tempo. Great movie. What was that movie? Great movie. It's about the kid, the drummer, Whiplash. Not my tempo. Oh man. If you haven't seen that, Gavin, that's a great movie. Oh, just hit my knee. So I am not a fan of being mechanical in terms of, well, I go for 3R on these trades. Well, my review tells me that 4R is available. I'm going to go for 4R. That's not my style. I like looking at each individual setup and determining what type of R multiple is on the table. What's the market generated information there? I understand some people want to take a different approach. They want to look at, hopefully, a particular playbook trade, a particular setup, even variants of that. And you could look at results and you could quantify kind of what's on the table under normal conditions. But look, your stop distance changes. Well, at least mine does. Maybe yours is fixed as well, so that would make more sense. But my stop distance changes. So even the timing of the entry affects how many R's are on the table. So going back and studying what's been available, you're not accounting for the variance and the variable of stop. If it's a dynamic stop like mine is, in terms of it's not a fixed distance. So that's fine as long as you're being very precise and methodical about that. That's just a style. That's okay. But yeah, if that's what you're seeing in the data, go for it. I suggest knowing where there's 1.5R on the table and knowing where there's 6R on the table, and stop using averages. Well, on average, this was available. No, there's better ways to do it, in my opinion, if you're going to put in the work to get more detailed in terms of reading the narrative and what's on the table. What is a CVA? A CVA is where you have it's value area. You may not even know what that is. And the C stands for composite. Okay. And a composite is many things which go into making one thing, right? So what we do is we take a day here and a day here and a day here and a day here that have a value areas of their own, and we merge them into one larger composite value area. It's a market profile term. So just Google about market profile, or take a look at some of the training that we have at apterostrading.com. And by the way, don't forget, guys, we just announced, the email was a little weird. It just said like from Ryan. So double check for that. But we put out an email from Apteros. We're doing a fall intensive. It's going to be like really intense every single day. You guys get to listen to me come up with the DMI, not like present the finished DMI product, but listen to me come up with it as I do my prep. We're then going to trade live together, the first couple hours of the session or whatnot. And then Maria says, intenser than your class, all caps. Awesome, guys. Good to see some of y'all are going to be in it. And then it's going to be like Q&A in the afternoons, review some of the key sequences, maybe do a little market replay together, get insight into me doing a review of what I did that session, all that kind of stuff. So it's going to be all out and, kind of like all access as well. So it's going to be very cool. Like I tweeted this morning, I've been wanting to do this. I'm really excited. We're finally going to do it. So JD, I have a nephew named JD. What would you say are the common adjustments that natural traders make from break even, slightly green to consistent 5 to 10 R months? Trade less, perhaps? Ding, ding. That's one of them. Yes. That's been the hardest step for me. I keep just treading water above zero net of commissions. Cheers, M. Cheers to you. Well, and cheers to you for, like I said earlier, it's a big deal. Treading water above zero. Look out for JD round in the corner. So it sounds like maybe you've been stuck at that phase for a little while longer than you'd like to be. So stay confident in that, though. I know it can be frustrating, but stay confident. Or stay positive about the fact that you are there. A lot of people want to be there and do not get there. So you're at a very strong position. Yes, probably the biggest thing that I see in people like really stepping things up is not making more, although that's probably second place, but keeping more is first place. Keeping more, right? You'll have 17,000 of profits for the month and 16,575 of losses for the month. Can you figure out something about the losses? Not that this is a soapbox thing of mine. You can't learn something from every loss you have, guys. That's ridiculous. There's a lot of really high-level trader people out there who preach that you can learn something from every loss. I could not disagree more. You mean to tell me that, and I'll get off this tangent in just a second, but sorry. You mean to tell me that in a random environment where news can come in and anything can happen, that there's like something you could do better for every losing trade? That's preposterous. And that goes against a strong trader mental framework around letting go of outcome and knowing that you're not in control of these results. There's only certain things you can be in control of. Yeah, if you screw up, if you miss a read, if you use one of your tools wrong, if you jump the gun, if you get your risk wrong, if you do a million things, that's on you and you can learn from it and get better. But if you execute flawlessly, as close to humanly flawlessly as possible, right? We're going to make little things here and there. But if you execute pretty flawlessly according to your process and you have a loser, there's nothing to learn straight up off of that. And that's important. Stop trying to reverse engineer and say, oh, well, if I would have applied this trade management there instead and taken that quicker profit, oh, that's what I should have done. I learned something there. I'm learning from my losers. No, you're a hamster on a hamster wheel is what you are. Okay, let's come back to the question at hand here. Sorry about that. I get passionate about some of these things. So losing less, figuring out where you're bleeding, where you have holes in your trading, really keeping good stats, tagging trades in something like TraderView. That's absolutely where you could be time of day. Could be you're losing money in crude oil, but making money in the NASDAQ and the S&P. Could be you're taking too many what you call just a scalp trade, and you're not tagging those, or you need to look at those tags and say, okay, these little compromised scalp plays, I'm actually net negative here. while my more A plus stuff with good narrative behind it, I'm making money. Maybe it's the opposite. Maybe on your big narrative ideas, they're just not playing out. Something's not conducive to that. You're missing something, and there's something to be technique wise in terms of narrative read figured out. Maybe you're just from a personal strengths and weaknesses. Maybe you're more, tailored to scalping, right? Maybe that's where you're doing well, even though you want to be this big narrative trader. Maybe you're trying to scalp because you feel like there's opportunities, and all these things. It's tough. It's tough to figure out. It really, really is. That's why one of the many million reasons why trading is hard. If you're not getting clear coaching and oversight, how can you don't know what you don't know, and it's very, very difficult. So some of the more common things, just to recap, and then we'll move on, are figuring out where you're giving back money. What are some commonalities in that? Figuring out where you are botching things up in terms of not making enough. So trade management is a big deal. So a lot of people are, for example, a very common thing I see is traders, they do a good job of holding a trade when they get into the right narrative and they hold it for all it's worth. But on days where they are wrong or the narrative shifts or whatever, they're losing 3 times as much as they make on those days where they do such a good job holding. That must be fixed. All right. Maria, what are the blue dashed levels on your chart? And do you cut an old CVA off as soon as price balances outside of it? Typically, dashed levels, regardless of color, are structural market profile based levels. And yes, I do cut old CVAs off, but we have rules for doing that. If you're a NADRO student, you know those rules. Go back and review that session. But it's pretty much, it has to do with new CVAs. So when you ask if balance cuts off an old CVA, the answer is yes, but only substantial balance. Or the second way is substantial new confirmed excess where there used to be balance. And so we have rules for doing that. Chris, what's up, my man? What do you do during a session when you're in a position, but the market kind of goes to sleep? Sideways chop, narrow range, stop and target set, just still watching and hoping for range expansion. I mean, I think that's part of the life of a trader. I mean, go take a look at my live tweeting today of being in the S&P short. We weren't getting through delta neutral. That's only happened recently here, kind of since we've been on the call. We weren't finding that energy, that speed of tape. I kept commenting on it. I even got some ads in there. So that's one thing, as long as it's not too choppy and kind of terrible price action, as long as you've got like some decent momentum to the rotations, you can campaign around a position. That's one thing to do, right? Add a little bit on pullbacks, scale out into new lows or near the lows of the consolidation. Or depending on, probably for me to answer your question, what's happened. So if I've already scaled a couple times or something, well, then I'm probably going to be more, again, go to that thread of live tweets today. I said, I'm now transitioning to kind of this mentality of don't care, see if I can get lucky. Who knows? I think was the words I used, kind of mentality. I think that there's probably people who read that tweet and was like, look at this hack, look at this amateur. But really, it's like one of those memes where it's like you start out here and there's like someone, I don't know how to draw this, like drooling or something, they're like stupid. And then you have like, I don't even know, the smart person here. We'll put a scholar hat on them. I don't know what I'm doing here. Big brain. That's what they do, I think. And it's the same thing. This is where you're confused, this is where everybody is. But then once you get to the high level, you understand. So I kind of thought about that, where This person's like, oh, hope I just get lucky. And the pro traders over here, well, I have this like supreme mentality of maybe I'll just get lucky. The difference probably in these two traders is like supreme risk management and an understanding of you're not just rolling the dice, but that you have an edge and that you also need to kind of let go. And you have no control over outcomes. So it's kind of a factor of get lucky, which you started with over here. Right. So that's, to me, that's one of the powerful things. Now, context matters, Chris. So if it's in a very suboptimal location and order flow is not looking good and all these things, I was already pretty compromised. I'm going to be more likely to maybe scratch out of that position, to maybe not keep that risk on. Whereas in a position where, like today, I had great potential for downside on, let's say, yearly and quarterly. I was compromised on monthly, weekly, but I'm willing to accept that because it's a fresh breakout. It's a day one breakout of a CVA after a failed attempt to the upside. So I feel good about the short position and short-term conditions. I kept griping about them in real time on Twitter. But that's just going to cause me to kind of scale some and maybe not add as aggressively and things like that. But this is a core position worth holding here. So that type of context matters in assessing, sideways boring. Do I just scratch it or do I just let go and hold? Hey, Merritt, why do you use 3-minute charts for the DMIs and not 2 minutes or 4 minutes or 5 minutes? I don't know, man. 3 minutes essentially fits the pit session in it nicely for the size of the chart that I have on the monitor that I have. It does not matter. Remember, for those of you who don't know, my analysis is not done on the 3-minute chart. That is just a conduit for me to put the levels on and show you, and then be able to recap a full pit session. That's all that chart is for. Somebody help Greg out. What's the handle for my Twitter? It's Merritt Black. In one podcast, you said cumulative delta in crude oil is broken. Is it still broken? No, it is not. That was during 2020, and then it came back in the line into this year. All right, guys. We've gone about 10 minutes over here. I've got some other responsibilities I got to get to. Great questions as usual. Love hanging out. Cheers. Happy weekend. Go check out that fall intensive we're going to do. Hopefully we get a nice group in there to really knock it out. See y'all. Cheers.